Got a question here from Matt up next. How can we use data to determine the optimum time within a growth cycle to sell a property? I have a property in Ellenbrook, WA, that I'm thinking of selling. So this is a really good question. It comes up quite a bit. Like, for example, we're still buying in some locations that have already achieved pretty amazing growth over the last 2 to 3 months, or maybe have achieved good growth over the last 6 to 12 months. And then maybe sometimes they've achieved negative or flat growth for a period of time. It's prior growth is not always necessarily an indicator that we're going to see more or less growth. I mean, Newcastle's probably a really, really strong example of that. So in terms of when do we sell, and I'll pull open the Ellenbrook slide correctly now, and that's the property prices. It really comes down to your set of circumstances, Matt. So like, what are you going to do with the sale of the property? Like, I find it's very hard for people to buy into an area, and when you take in your buying costs, so you've got your buying costs, you've got your stamp duty, that's 5%. Then you've got your selling costs, so then you've got that, maybe say 3.5%, 4%. Then you've got to pay capital gains tax on the way out. And then if you're then going to go buy into another location, you're going to have buying costs and potentially selling costs again. So it's really trying to understand why one would be looking to sell. Now, where it will make sense, if it's part of your debt mitigation strategy, where you've bought a property and you've got a home with a mortgage on it, and you've decided, hey, this could pay off my mortgage right now, then that might be a really good time potentially to sell, purely because the interest you're paying on your home loan is all non-deductible debt. Now, but having said that, I don't see here any reason why we should be looking to leave the Ellenbrook market as it is at the moment. We can see prices are pushing to the sevens. I guess from a supply risk standpoint, if we were to go onto the areas, and we'll pull it open because I'm a visual man. If we were to go to around the surrounding areas where there might be some new supply coming around the outskirts, you've got to remember that the new supply coming through, like, they can barely build a home these days, house and land packages for under 700,000. Most of them are going to be more. So depending on how your properties fit out, like, is it actually really a supply risk, or is it just going to maybe be a rental competition for you? The other thing, again, if we go into Ellenbrook as a whole, Ellenbrook would be more of a blue chip suburb from a long-term hold perspective, because firstly, we look at vacancy rates in Ellenbrook and the surrounding areas, very, very strong. And the entire Perth market, it's one of the tightest vacancy rates in the country. So you're going to still see really strong rental price pressure in that location. So even if you were to say, well, is it going to be the worst thing in the world if you had a slight little stagnation period for a couple of years or 6 months, maybe, let's say, because your rental pricing is likely to still keep trajectorying up. So I would say it's more likely still of a hold if I was to go into the LGA of Ellenbrook. And I'm going to just show you why I've gone into just purely Ellenbrook as a whole here. Sorry, Swan as a whole, rather than just go in Ellenbrook, because Ellenbrook is one of the ones that had, when I just pulled it open earlier, had a bit of a data anomaly in there, and I'll explain that one to you as well, if I could find the city. So you can see most of the approved locations for Swan are in the 90s and 80s. We've got Ellenbrook here. There's a couple of reasons why it's a little bit lower. Again, it's just had a drop blip of a month, and even here, Lockridge has one big data swing the other way. So firstly, they're actually selling, so the sole delta here is they're selling above asking price. So they're essentially going above and beyond. So that, to me, is still a sign of a hot market in somewhere where you would want to stay. So what would be an indicator to your question, Matt, what would be an indicator of selling is vendor discounting being really strong. So if people were trying to sell a property at 700,000 and they were only getting 690, 680, 650s, that is a sign potentially you would want to sell. But again, there's got to have more than just that one factor, because that for us at the moment is a buy reason for us here in Melbourne. Now, if you saw vacancy rates getting worse, you saw more supply coming in on top of that, you saw rents going sideways or down, your days on market, days on supply increasing, all of those things as a whole would be kind of tick, tick, tick. These are indicators which we need to get out, but we're not really seeing that in Ellenbrook. You've got really tight days of supply. Property prices are going above vacancy rates. So we can see here that this is why we would always double check the data. So something like this was approved. There's a data anomaly here, which we do at an advisory level check into. It says 3% vacancy rate, but when we come in and check it at a final level, we see it's actually 0.75. So all of these things are actually saying it's probably not in the optimum buying window because it's maybe a little bit later in the cycle, but it's still something which we want to hold on to for a period of time. But again, it needs to go back to why you're looking to sell. If it's to leapfrog from area to area, I think it can be kind of trying to catch falling knives by going down that pathway, because again, all your exit and entry costs might get you on the back end. If it's to free up serviceability, I should say, to restructure and do all those things, then it might be something that's worth considering. But if you reach out to the team, maybe we're more than happy to answer some questions for you regarding that one as well. But thanks for setting that one through, Matt.